Hi guys, welcome back for my second video. Hope you guys enjoyed my first one, and let's get on with today's trends in the news. Let's start off with Bitcoin and other cryptocurrencies. Currently trading at $6,247, Bitcoin is down almost 15% in the last week. People tend to get confused about the difference between Bitcoin and blockchain. Blockchain isn't Bitcoin. Instead, it's the technology underlying Bitcoin. More specifically, blockchain is the incorruptible, decentralized digital ledger of economic transactions that can be programmed to record not just financial transactions, but virtually everything of value. Initially, the term blockchain appeared as the name of a distributed database. This was then implemented in the Bitcoin system in 2008 by someone known as Satoshi Nakamoto as the first blockchain app. He tried to use the fact that Bitcoin had to be mined using energy in the form of electricity and that they are limited in supply to price the value of the cryptocurrency. However, many investors have lost interest in trading Bitcoin in the last few months as they find no material value coming out of it, like how we see in gold and other commodities. One example is how gold displays ornamental value and how land can be used to field crops that can be sold to feed people. The bull run that saw Bitcoin prices rise to more than $20,000 per Bitcoin was purely due to investor speculation that the cryptocurrency is in high demand and the expectation that someone will be willing to buy it off them if they buy it at a higher price in the future. However, I feel that the lack of knowledge of the layman in the industry of blockchain and cryptos was the main reason for the rise and the current price of Bitcoin. Warren Buffett himself said that he doesn't value the cryptocurrency. And the CEO of JP Morgan was more popularly known for calling Bitcoin a fraud and that governments would be the first ones to delegalize it. The two leaders in the financial industry did, however, mention that they feel blockchain technology does have a big part to play in the future of finance and administration. Hence, I feel that investors should check out other ways to put their money into the technology rather than the riskier cryptocurrency movement. In other news, the benchmark MSCI Asia Pacific Index fell for the 10th consecutive day, extending its recent decline to about 5% and bringing the loss in value to almost $700 billion this year. This after investor sentiment bearish against emerging markets, the continual rise in the US dollar and the bear market in China stocks continue to drive down stocks. It is rumored that this contagion is likely to have a spillover effect into advanced economies due to financial linkages. Since 2009, non-resident gross flows into emerging market financial assets have averaged around $1 trillion annually. Total outstanding exposure may be around 50% of GDP in advanced economies. The main driver has been the low interest rates in developed world central banks and the lure of high returns. Despite the reductions, bank cross-border lending constitutes of over half of the exposure. And UK, Japanese and Chinese banks are particularly vulnerable. If emerging market stresses persist, then advanced economies face additional credit tightening, exacerbating the reductions in liquidity underway and potentially transmitting price shocks. Additionally, in contrast to Trump's anti-free trade stance, other economic powerhouses are having their own reunion and having reassuring talks on trade and peace, which might be pretty worrying for the US. Just yesterday, Putin hosted China's President Xi for the largest war drill since the Cold War, with hundreds of thousands of troops, including Chinese soldiers, taking part for the first time in eastern Siberia. The massive military maneuvers came as tensions between the West and Russia have intensified to the highest level since the days of the Soviet Union. The drills have been condemned by NATO as a rehearsal for a large-scale conflict. Both presidents have even invited Japanese President Shinzo Abe to join talks on reassuring peace in the region, and this is something that the US would be keeping a close watch to. I'd like to talk about something I find extremely interesting and what might just be a build up in the transformation of China to be the world's leading powerhouse. Just this week, China took control of Sri Lanka's Hambantota port on a 99-year lease last week, in a deal that will bolster up China's presence in the Indian Ocean. A deal that has been touted by Sri Lankan government to be threatening to the country's sovereignty was carried out as the nation was struggling to pay its debt of more than $8 billion back to Chinese firms. I feel that if this continues to happen, the rise of China to be the world's greatest superpower will be inevitable. Anyways, guys, thanks for listening to me. And if you feel that I've provided any sort of information to you that is helpful, please do not forget to comment, subscribe, and like. And I'll be back next week for another dose of real-time economics.